Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon, welcome to GrainTV. It's July 29th, 2013. I'm Logan Burgess. To my right here is Cody Bills. Cody, let's jump into fire tip, see how the grains open the week here on a Monday. As you can see, a little bit of weakness across the board, with the one exception being that August 13 soybean contract. Take a look here, old crop corn down 2 3/4, new crop corn off 2 3/4 as well. August soybeans up 17 3/4. We had the new crop November contract down 8 1/2. Wheat had a relatively quiet day here today, up 1 1/4 in Chicago, down 1 1/4 in Kansas City. You know, Cody, looking at the quote board here, certainly the one thing that stands out is that August contract, and it seemed like we certainly had some technical factors, I guess, supporting price.
Yeah, you know, we've had a very hard sell-off. You know, this is definitely going to influence the market. Yeah. On Friday, it looked like the price action, you know, we traded down to a low and then closed up near a high. You have that doji, that long wick, and that sometimes can indicate a pause or a change in direction, at least for the short term. And I think that had some impact today. You know, you look at the August contract, I think, you know, we're going into first notice day. The volume's a little bit less than other contracts, and I think that's one of the reasons that contributed to the violence of the price movement back to the upside. One thing I just wanted to highlight here is these Bollinger Bands. And basically, a Bollinger Band is driven off of the moving average. And this is, the yellow line is the moving average. It is a 50-day moving average. And one of the things that a Bollinger Band can do is kind of give you an idea, especially when prices start moving very sharply in a direction, right, as to when you may start to see a snapback, or when you may start to see a little bit of a price correction, because you get that sort of elasticity a lot of times after a very violent price move. And I think that's one of the things that happened here today. You know, we traded outside of the Bollinger Bands for a significant part of Friday. We're able to close back within them. We also have a support back here around that 1350. We printed lows. We had this kind of tweezer bottom, and then we started trading higher. I wouldn't be surprised if we get a little bit of a follow through to the upside here, but look for resistance right around that $14 level if we're able to get up there.
Yeah, you know, it seemed like today and Friday, it seemed like fundamentals were a little bit more supportive in the market, certainly, than they were early in last week. One big thing that we really hit on hard last week during GrainTV was a substantial decline in basis that we saw last week. Take a look here at this chart that we used a lot in last week's show. You can see here the blue line, once again, is average U.S. spot basis compared to the August contract. And the red line here is the August 13 futures contract itself. And you can see here the bottom really fell out of the cash market, and futures kind of responded accordingly. Really, for the last 2 or 3 months, we've seen a lot of strength out of those cash market bids. You can see there back at the beginning of July, we were sitting about plus 80. In Friday's action, we were down to about 40 below that August contract. And we've seen the pace at which elevators are backing off that basis slow down a little bit here, though, in the last several days. Certainly seems like more merchandisers out there are interested in bidding up the August and September contract, and that seems to be supporting futures here today. I guess bottom line, you know, Cody, in light of the technical and the fundamental landscape, wouldn't be surprised if we did see 1350 hold for August, I guess, in my opinion.
Yeah, and I think this could be sort of a short-term event. Yeah. You know, it's not necessarily that this trend, this downward trend that we've been seeing in prices is going to stop, but I think at least for the short term, the violence of the selling, the speed at which we saw the prices come off here, I wouldn't be surprised if we slow down, maybe get a little bit of a rebound.
Yeah, you know, I guess switching gears here a little bit, certainly a very different story on old crop and new crop. Today, after the trade closed, we did get the crop progress and conditions report. I guess, you know, what's going on over there?
Well, when you look at conditions, we actually didn't see any change from last week, so I don't think that's going to affect the market a whole lot. When you look at the progress, we did see a 28% increase in silking, so we're up to about 71% silking throughout the U.S. for the corn crop. For pod setting, we saw a 12% increase, now sitting at about 20% throughout the U.S. Logan, is that going to affect price action tomorrow?
You know, I wouldn't be surprised if it didn't have a big impact on prices, I guess. You know, in last week's trade, we saw a lot of weakness out of the December 13 futures contract for corn, November 13 for soybeans, really as a result of some good weather expectations for this week in the grains in general. So I don't think it's a big surprise that we didn't see a huge change in condition ratings. We know last week was a pretty good week in terms of growing conditions. And here moving forward, I think expectations are for temperatures to remain relatively mild and some good precipitation coming into the Corn Belt. As you can see here from this map provided by Planalytics, we see highs just in the low 80s here for much of the Corn Belt later in the week. And I think, though, the bottom line is that a lot of this has been factored in the market. We saw a lot of weakness out of those new crop contracts last week. And I think that, D's 13 corn right now is trading pretty substantially below $5 as a result of this. Bottom line, I don't think we're going to see a big surprise there. Here moving forward, though, Cody, with more of a long-term outlook here on things, I know last week you had the opportunity to go out and meet up with Planalytics at their seminars in St. Louis and Memphis. I guess what were some things that they're looking at right now that producers should keep in the back of their minds here moving forward?
Well, one of the big wild cards that I took away from that, and I was lucky enough to attend the meetings, they were very insightful, but one of the major themes that I think we're going to be thinking about as we move toward harvest is the possibility for freeze. Now, we know we got the crop into the ground significantly later than we normally do, and the problem here is even if we have a normal freeze, we've had a little bit cooler summer here, and so when you look at the growing degree days that are needed to get to black layer, that puts a significant amount of the crop at risk if you have a normal freeze. And this slide shows you kind of that typical, that average dates for that first freeze. And I think even if we have a normal one, we could find ourselves with a little bit of yield damage in this crop. But the problem is that we could very easily get an early freeze, and that would leave a significant amount of our crop exposed to some serious yield drag as a result. And I think that's something that we're going to have to keep an eye on as we get closer to harvest.
I guess as a producer here looking at D's 13, certainly seems like the market's very comfortable with the production out of this crop. I guess in light of the risk of this early freeze, what's kind of the play right now? What would you be telling a producer out there looking at kind of conflicting news? The crop's in good conditions now, but we have this situation that could develop.
This is a wild card, and I think it's going to be focused later on. I don't think this is something that's going to be factored into the market right now. I think the market is focusing on the fact that they're very comfortable with how the weather shaped up for the major reproductive stage here. Now we're going to be focusing on grain filling. I think the grain filling, it looks as though the weather is going to be very positive for that as well, and no significant problem. So I wouldn't be surprised if we continue to trade down here. This risk of freeze, I think the premium will most likely start to develop here later on in August. The fact that we have volcanic eruptions in Kamchatka, that could influence the market could influence the weather as well. That could actually, typically when we see that sort of activity, especially when it's a lot of activity, that can be followed by a cooler and even wetter fall. So the bottom line here, not saying that will happen, that's just another wild card here, and I think that the cards are stacked in the possibility of having frost freeze actually impact yield, and therefore I think definitely throwing a wrench in the market maybe later on, maybe during September.
Certainly. Well, as that situation kind of develops here, as we move through the summer and into harvest, we'll keep you posted on that situation here on GrainTV. In general, though, Cody, I think that's kind of what we saw here for the grain market on a Monday. Thanks a lot for joining us. We'll see you back here tomorrow.